Morning, guys. It's Monday, April 28th, 5:26 a.m. Central Time. Grain markets are lower across the board to start a new week. July corn futures down 4.5 at 481. July soybeans down 4.5 at 1054 and three quarters. July Chicago wheat down 8.25 at 536 and three quarters. July Kansas City wheat down 9.25 at 541 and three quarters. That's fresh life of contract lows in the Kansas City wheat contracts. July spring wheat down 6 at $6.25. We've got some conflicting chatter out of the White House regarding China. Why don't we start there?
So, the U.S. may or may not be holding trade talks with China. On Sunday, President Trump said at a press briefing in New Jersey, they want to make a deal. Obviously, right now, they're not doing business with us. Treasury Secretary Scott Bessent, however, said that he was not sure if Trump had spoken with Chinese President Xi Jinping. Bessent did, however, indicate that he had spoken with his Chinese counterpart on more broad matters. Beijing has denied that any trade talks have taken place. Some of the news wires have indicated that soybean futures traded lower early this morning because of the uncertainty. Also on Sunday, USDA Secretary Brooke Rollins said that the U.S. is having daily conversations with China regarding tariffs.
Mixed messaging. Trump says, in so many words, we're talking with China. Brooke Rollins says we're talking on a daily basis. Scott Bessent says, I don't really know what's going on. Bessent has talked with his counterpart, but not specifically about trade matters. So we're kind of left out in the open here. I just got a message on my phone, not a message, but an alert popped up from Bloomberg. This was the headline this morning. China says it doesn't need U.S. grain as Brazil soybeans pour in. China's grain supply won't be affected by a loss of U.S. feed, grain, and oilseed imports thanks to abundantly available substitutes on the global market. So that's, Chinese government talk again. I think China or Beijing is denying any trade talks because it's messaging. It's messaging to the population that, hey, we're standing our ground here. Whether or not that's true or not, I don't really know. It sounds like maybe they're talking, though, behind the scenes. In any case, China is a big deal for the soybean market, just not right now. China bought a lot of soybeans this last marketing year, but they've got almost everything has been shipped. China does account, generally speaking, in a normal year for ballpark 20% of all demand for soybeans grown in the United States. So we're in this kind of period that just kind of happens to coincide. You've got a period where you got a trade war, but it also coincides with the period where China just doesn't buy a lot of soybeans from the United States. So if there was a good, probably never a good time for a trade war, but if there was a good time, this particular slot in the calendar year is not a bad time. Typically, like midsummer, China will come in and start buying new crop beans, but hopefully we can get this all figured out before that happens. To look at some soybean charts this morning, the board's down a little bit. We're still holding above this 200-day moving average in the July contract. So the chart still doesn't look half bad to me, despite the fact that we rejected some fresh highs on Friday. The November contract looks similar. You've got a little bit of an uptrend line underneath the market. So the market still looks all right, but maybe we're down this morning just because of some of the uncertainty.
The Trump administration held trade talks with Japan and South Korea last week. According to Treasury Secretary Scott Bessent, the discussions with both countries were productive. Bessent noted that the bilateral trade talks with Japan had gotten off to a strong start. The negotiations with South Korea focused on establishing a more balanced and mutually beneficial trade partnership. The U.S. and South Korea agreed to continue trade talks in the future, including further discussions on currency policy.
Japan was the second largest buyer of U.S. corn this past year, and I think they will continue to buy U.S. corn the way that it sounds. So these are negotiations that appear to be going well, whereas China negotiations are either non-existent or not going well one way or the other. These are just not countries that are going to move the needle in a huge manner with regard to our grain exports. Japan could buy some corn and maybe some more other items, maybe not so much.
Weekend rainfall was scattered across some portions of the U.S. Corn Belt. The scattered rains mainly impacted southern and eastern areas of the Corn Belt, in addition to the Mid-South. Central Iowa saw some rain. North Dakota, South Dakota, and Minnesota were mostly dry, while scattered rains hit parts of Kansas, Oklahoma, and North Texas. Additional rain across the Mid-South and eastern Corn Belt is likely over the next 5 days. A storm system sits over South Dakota and part of North Dakota early this morning.
Yeah, I don't know how what the totals will be with this system. If you guys are in South Dakota or the southern part of North Dakota and you've got some rain totals, drop them in the YouTube comments. Forecast for the next 5 days through May 3rd, the call it mid-south and southern plains, like North Texas, Oklahoma, into parts of Missouri, Arkansas, will see the heaviest amounts. And then that system that's on the radar this morning is what's going to bring that rain to North Dakota, South Dakota, northern Minnesota. You'll see some lighter stuff in the eastern Corn Belt, southern half of Illinois, good chunk of Indiana into Ohio, Kentucky. It opens up a little bit more in the 5 to 10 day period. You're going to see rain in Minnesota, Iowa, Nebraska, down through Kansas, through the plains, really across a lot of the Corn Belt. I wanted to show you guys these maps this morning. I think I always just take for granted that everybody knows where we grow corn and soybeans in this country, but perhaps you're a foreign viewer, or perhaps you just have never seen this before. But the Corn Belt, it's pretty concentrated into just really a handful of states. I mean, people always complain that, oh, maybe they're talking about Illinois and Iowa too much, and it's because they matter a lot more than some of the fringe areas. I'm not saying you don't matter. I'm just saying that with regard to the market and the way things trade, it's really just a handful of states and areas that matter. Soybeans, it's a little bit more broad because you've got the Delta areas, you've got some call it outside of the Corn Belt fringe areas that are doing a little bit more with regard to soybean production. Over the last 7 days, HRW wheat country, I just wanted to mention this morning, caught some decent rains. That western part of Kansas, it wasn't everywhere, but it was decent where they caught it. So there is this perception that the HRW wheat crop is improving, and that, I believe, is why this July Kansas City wheat contract posted fresh life of contract lows overnight. Not a good look necessarily.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
Shea Folk was on Thursday. We know that the trends have changed a little bit with regard to planting dates. A lot of farmers are planting soybeans earlier than corn now, and there's some reasons for that. Shea went through the economics of early soybean planting and actually how it looks when it comes to yield advantages, and then how it looks on farm budgets. There are some, it's not as simple as just plant soybeans early. It does make sense, but only in certain situations. And Shea talked about the margin impact, which I thought was super interesting. I did 5 Minute Friday on Friday, and I talked about what it costs to produce a podcast like this one. And we lose a lot of money doing this podcast. And I went through the line item expenses and exactly how it works. We had a few questions come in about this when I sent out a feeler for 5 Minute Friday. I said, guys, what topics do you want to hear about? We had 3 or 4 people say, hey, do a podcast margin sheet. You guys talk about farm budgets all the time. What does your business look like? This part of our business absolutely sucks, just so you know. And that's why you need to buy the premium subscription, because without our premium subscribers, we would not be here. I'd be bankrupt in a month if we didn't have the premium subscribers. So we appreciate you guys. We love you guys. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. You'll get our morning email, which goes out at 5 a.m. Central Time every single business day, jam-packed full of information, charts, graphics, headlines, all of my cash grain marketing recommendations. 6 most recent premium videos are included in that first email that you'll see. $50 a month, cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else, guys. This is an information only service. I don't want to talk to you. I just want to send you info. Give that deal a shot this morning.
The funds continued to increase their net long position in the soybean market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, April 22nd, large money managers were net buyers of 10,000 soybean contracts. The net long of 53,000 contracts is the largest since the first week of February. The funds were also net sellers of 13,000 corn contracts and net buyers of 4,000 contracts of SRW wheat on the week.
There's only one piece of this that I have trouble understanding to some extent. I understand the corn long. Corn situation's tight in the U.S. It's tight globally. Wheat, I feel as if, is probably kind of the short leg of the spread here that the funds are holding. And then you've got soybeans. This is the one that is kind of a head scratcher. The funds are net long the soybean market, despite the fact that we're in a full-blown trade war with our largest buyer. We've got a monster crop coming out of Brazil. All of the negative headlines, world balance sheets, world carryout, all that stuff just doesn't look very good. Yet the funds are long. So what do they know that we don't know? Is it a US dollar trade? Is it a momentum trade? Is it perhaps lower than USDA acreage trade? I don't know, but interesting stuff. Premium subs, you guys have the full fund tracker charts in your email this morning.
President Trump is demanding that American ships receive free passage through the Panama and Suez canals. For months, he has pushed back against Chinese influence over the Panama Canal. Over the weekend, in a Truth Social post, Trump expanded his focus to include the Suez Canal, claiming that neither waterway would exist without the U.S. He has directed Secretary of State Marco Rubio to take action on the issue. Since returning to office, Trump has made reviving U.S. shipbuilding a priority, challenging what he says is China's unfair dominance in global shipping and shipbuilding. In February, Panama agreed to allow U.S. warships free passage through the canal after Trump criticized China's influence and threatened to take it back.
The cost associated with moving any sort of cargo through the Panama Canal is important. Tolls imposed by the Panama Canal Authority directly influence the cost structure of U.S. ag exports. A study by USDA and Texas A&M University found that increasing canal tolls by $4 to $5.50 per metric ton could reduce U.S. corn and soybean exports by up to 1%, with producer revenues decreasing by approximately $248 million annually. So if you could get to a point where there were free travel through the canals, that would be a positive for exports.
The Trump administration is once again considering closing the border to Mexican cattle imports. In a letter to her counterpart, USDA Secretary Brooke Rollins warned that the New World Screwworm outbreak in southern Mexico is expanding and must be addressed. If the issue is not resolved by April 30th, the USDA will impose restrictions on cattle imports to protect our domestic herd. Rollins criticized Mexico for limiting the operations of an aerial spraying company that is working to eliminate the pest. She also noted how Mexico has placed steep import duties on essential eradication equipment. New World Screwworm was first detected in southern Mexico in November, prompting an initial border closure that lasted until early February. Mexican feeder cattle imports remain below pre-closure levels, adding to the already limited supply of feeder cattle.
Should this be considered a bullish cattle headline?
I would say so. Yeah. Obviously, we have such a lack of cattle out there right now, and when they closed the border the first go around, it was definitely a bullish headline, and I think we could definitely see the same impact.
Interesting. All right, what's up next?
We had a flash sale of corn on Friday. U.S. exporters sold 9 million bushels of corn to Mexico. Of the total, 5 million bushels are for delivery during the current marketing year, and the remaining 4 million bushels are for delivery during the next marketing year.
Good to seeing some new crop business. Mexico, I think we're generally speaking on good terms. They're still negotiating, talking, but the tone out of Mexico has been pretty positive. So it's good to see the sales. What did cattle do on Friday?
Cattle futures were mixed on Friday. Live cattle were 15 cents lower to 75 cents higher. Feeders saw gains ranging from 135 up to 192. Cash cattle trade was light last week, although it was higher. In the Texas Panhandle, cattle were $2 higher compared to the previous week at $2.12, and then in Kansas, cattle were $8 higher at $2.18.
We've got a tremendous lack of volatility in the outside markets this morning relative to what we've seen the last month or so. The Dow Jones down just 30 points. The S&P's off 8 points. Bonds are about flat. U.S. dollars up just marginally. Crude oil is down 32 cents in the June WTI at 62.70. Have a great week, guys. We'll be back on Tuesday.